Hello everyone, welcome to the channel. How was your trading day? Was it good, bad? Did you follow the process? Our discussion yesterday was very simple. If the day's high of yesterday is being crossed, then we can see the small tiny bit of gap which is there to be easily filled. Market easily filled it. But if you ask me whether there was any trading opportunity, the answer is no. We did not get one simple trading opportunity also. Market opens slightly gap up compared to yesterday's closing. The moment we see this kind of a drive up, what we expect is market to come back to a demand and then drive up higher. This is what we always expect. If this does not happen, then what we generally expect is if this high is broken with a closure, then we expect market to come back to this leg of price action and then drive up higher. This is what we expect, right? Market gave a demand before breaking the structure. Market gave a demand and it never came back to this demand. Even if you can see that indecision candle which we have before the break of structure, this was also not retested before our target was being hit. This was tested back only at the time of closing, wherein at almost 320-ish time frame is when it came back to this particular demand, where it was almost the closing time. Then there is no point in trading because this kind of negative trend was being built. If this was not being built by the market, then this would have been a solid trade, but this did not happen. See, this is what I am saying to you every day, that there is no necessity to trade every day. Yesterday it was a very very solid trade, today it did not happen, so what? Tomorrow there can be even better trades. That is what should be your mindset. Don't think that okay, today we did not make profit, it is not good, we ended up in loss, it is not good, we need to study more. Nothing of the sort. Market can be untradable sometimes. Market can be untradable, understand this. So what we see from a higher perspective is this supply is being tested and market gave a small change of character in 5 minutes time frame. Also, if you see, it can be clearly seen that market rallied up from here, came down, market went up, creating a new higher high, and market gave a closure below this. The moment we get a pullback, we expect the market to come down. This is what we generally trade. Okay, so this is a solid trade for tomorrow. If it happens, well and good. If it doesn't happen, it is still no problem. We can look for better trade in the coming days. So what we have as part of this closure is this supply is now converted to a refined supply now. This is the last supply which we have as part of today's price action. So the moment market opens flat, okay, this condition is very crucial. If market opens flat, gives a small negative reaction in 1 minute time frame from this particular supply like this, then I'm interested to take the market down. If this kind of a negative reaction is not obtained in 1 minute time frame, I'm not interested in taking the market down, because market's trend is slightly bullish. Okay, slightly bullish. I'm not saying it's completely bullish. Even if you go to 1 hour's time frame, it has changed the character, but it is not given a very very solid upward movement and all. Okay, it's slightly bullish but not completely bullish. If we get the market gap up, and still if we get a negative reaction like this from a 1 minute time frame, I'm still interested in taking the market down till this particular supply demand which we have as part of today, or till this gap which we have as part of yesterday. These are two possibilities if market opens flat and goes up, or if market opens slightly gap up. If this negative reaction is not received, and if market drives up here, okay, like today, if it drives up here, then there can be a very big targets expected on the upward direction, because if you see from a 30 minutes time frame, we have lot of equal highs being formed here in the market. Okay, so this equal highs will act as your liquidity. Market, whenever there is a liquidity being formed, it tends to hunt the liquidity and it will go to the next possible supply above this liquidity range. So we have a gap which will act as a supply. So there are high chances that market can drive up here, maybe tomorrow or in the coming days also. The moment we get closures above 23,900ish range, above today's high, and a small pullback, we can take the market all the way up till here as part of swing trading. As part of intraday trading, we can see there are couple of untested supplies or untested ranges which we have. All of these can act as your reversal points, meaning 24,050 can be your first target on the upward direction, because there is again equal highs being formed here in this market, in this range, right? And above this we have a supply, so there are chances that market can hunt this equal highs and go to this particular supply. Above that we have another supply here as well, so this can also act as your reversal point. For simplicity's sake, tomorrow it is Sensex expiry. If Sensex supports and gives a very good movement, we can expect a great movement in Nifty like this. Trust me, this can happen if Sensex supports. If Sensex decides to be in a range bound and does not give any kind of a movement on the upward direction, Nifty also will be range bound. I am interested in put only when we get negative reaction from the supply which we have as part of 15 minutes or as part of 5 minutes time frame which we had marked as part of this change of character which we obtained from supply. Only when we get a negative reaction I'm interested in put. Rest other cases I'm not at all interested in put. As soon as we get closures or as soon as we get market opening above 24,870ish range or somewhere there, and if the market sustains there, then there are chances that, say for example, market opens here, okay, and does like this kind of a movement. The moment market taps today's high itself, then there are chances that market can rally up like this. This high range itself will act as your demand in that case, and then market can rally up to the next possible supply. Keeping the video short, if you like the analysis, make sure to like the video, subscribe the channel and follow for more such educational content. So thank you so much for watching. We'll meet in the next educational video.